Okay. So I know nobody's here yet, but I want to cover assumable mortgages and what that means for people and what it is. Honestly, I'm going to pull up notes that I don't think I can share you. I'm not capable of sharing here when I go. I'm on YouTube Live and Instagram Live right now, but I can't really share my screen. I don't know how to yet, but assumable mortgages is a real hot topic right now. And what people are doing with that is like they don't know what's going on and how many it is. And honestly, there's like a million plus that are available out there, and they've only processed 3,000. So it's a huge opportunity for those that can handle that. But there's some little caveats that's really important that you understand. If on the YouTube, I've got a lot of the points placed in the description, so you can look at that. But to assume a loan, you got to come up with the difference in the purchase price and current loan. What does that mean, right? If you have a loan of let's say $500,000 and you're going to sell it at $550,000, you got to come up with the $50,000 plus fees. That's going to cover that, right? You need to be able to cover those fees because you're assuming the mortgage that seller has got to come up with, has got to. They don't have any extra money, right? That's why you're assuming the mortgage, and you might say, okay, I'm gonna give you $10,000 and I'll assume the mortgage or something like that, or they might have some fees or something like that. So, and however that's going to work. So it's a tricky thing to deal with. I'm willing to help tackle that. But what's really important is that, there's only a few states, right, that actually have the ability to, or I shouldn't say they have the ability. They all have the ability to, but not all companies are actually going in a second and covering the money in the arrears. But that's going to be a different interest rate. And that interest rate is going to cause like a blended interest rate. So let's say you assume a 2.95% interest rate mortgage, but you're going to be getting a second of, say, that's going to be at 4, 5, 6, 7%, 8%, maybe 9% being in the second position. Then you have like a blended rate, and then you'll want to be talking. You'll have to talk to the loan servicer that's going to be doing it. You won't be getting necessarily a pre-qualified with a regular mortgage lender, and mainly because the service member, right? The what's it called? The service provider has like a third-party member that will handle the application process that you'll still have to do in order for you to be able to qualify for it. Now, remember, they don't want people to really do that. They would rather you refinance to a higher interest rate, so that you have a conflict of interest in that. But sometimes you can still, there's ways that it'll still go through. There's going to be fees and things like that associated with that, and it's going to be different for each loan servicing company and who they use as their third-party loan servicing provider who's going to pre-qualify you. So can I give you numbers? Not really. Now, there is a company called Rome that will that will do a second, but they only are working in a few different states right now, not California, where I'm at, but they are currently working in Georgia, Arizona, Colorado, Texas, and Florida. So those ones, they are working on that. Conversely, what's going to happen is the first thing that you have to do is that seller's got to really cooperate with you. If they're not cooperating with you, what's going to happen is nothing's going to happen at all. So what's going to happen? They have to call the loan servicer for you. Because you can't call them and do it. They have to do it. And you kind of got to get together to do that. So what does that mean? That means that everybody's got to kind of come together. You got to have an agreement in place in the process, and you have to go through the steps in the process to get pre-qualified. you're going to have to show funds. It's almost like getting pre-qualified for a regular mortgage, right? Sometimes even more so, because they're absolutely trying to find reasons to not do it. So it's a tall order for the most part, but it's possible. And everybody was like, I'll just assume the mortgage. I'll just assume the mortgage. And I get it. I mean, we know the benefits of it. If you've got cash to help you close, right? The benefits is that, you get into a lower interest rate, and you're already, like, let's say 5 or 6 years or 7 years into the mortgage program. So you're actually paying more towards principal in there, and you're getting like a 30-year mortgage. Now, there are some things like that insurance companies might have something to say about that. You have to be aware of that, and you have to make sure that everything's on the up and up. So you got to be really like an A+ credit rated person on paper for them to seriously consider you. And let's be honest, not everybody is like that. Okay, the people that are, they're in a good position to be able to go in and assume a mortgage, and it's quite possible that's going to happen. Okay. What other notes do I have? I got notes on this. You're looking at a 6 to 10 week escrow. So it's going to take a while. So when you get into it, it's not like you're going to assume a mortgage and it's going to be in 30 days. It's not going to happen, right? Why? Because it's unprecedented. People don't do it as often, and it's a skill position to be able to handle that. But if you do your due diligence and you dot all your I's and cross your T's, you're in a good position to make that happen. And Rome, the company that does this right now, where they'll kind of fund the second portion of it, so you can do this. They charge themselves currently. That could change. Charge a 1% processing fee to do it. Okay. And what happens is that you got to go. You know how for those that have mortgages, it's VA and FHA loans are the ones that are assumable. If it is any other kind of loan, it's not assumable. But then you still have to call that customer service line, and you got to find, the first question you have to ask them is like, are you processing assumable loans? And they may say no, because they're only doing it in certain sections of the United States, or they're only doing certain ones. Okay. And that in turn is the biggest challenge. That in turn is absolutely the biggest challenge. So I don't know what to tell you, but it's a long shot, but not impossible. And let's see, what else did I got? I have some other notes here. You're going to ask questions like, are you processing assumable loans? Is the loan assumable? How long is your current turn time for to process an applicant? What's the fee cost to the buyer assuming the loan? That's going to be something that you want to think about if you're the buyer and you want to assume a loan. They're going to charge you processing fees also, because they're going to charge, if Rome does it for you and handles the second, that's 1%. And then you're going to have processing fees from the servicer, like the loan servicing provider. Okay. And you got to give contact information to the buyer so they can get pre-approved. Buyer cannot use their lender. Service company has a third-party lender that handles the whole thing. Keep in mind, loan contingencies will be longer time frames, and because you can't control the processing. So it's a long shot for the most part, but it's not without the realm of possibility. I'm trying to keep this short and sweet, because nobody wants to watch me ramble on forever and ever and ever. I don't even know if anybody showed up on these live videos, but I just know it'll show up again. But is it possible? Yes. It's kind of like when they started doing short sales back in 2007, 2008. Nobody had the skill set to do that. And because the banking institutions or loan servicers didn't have any protocols to do that, because they just didn't do it, and therefore that's why we had all these things. Now there's protocols in place for all that stuff because of what happened. And I was talking about short sales back when we had the big old crisis back in 2007, 2008, the lending crisis. But when it comes to a loan assuming, there's no crisis, so there's no real need for them to actually put protocols into place. So there's definitely ways to do it, and up for it to try to do it the best I can and help you with that process. But there is things that you have to do to get pre-qualified. You need to make sure you got a good A paper kind of credit rating. You can't do it with a bad credit. You're going to have to do it with a good credit. And those are one of the questions you're going to ask that servicer. What's the credit rating that you would consider doing this? And they may say it's got to be 750 or higher or something like that, for all we know. And that if you are that kind of credit rating, it's quite possible. But then they're going to look deep down into your loan history, and they're going to find those few things that don't make it so that you're not perfect. They may use that as a reason to not give you, to not approve you. And that's a loan servicer on the end. So they will be finding reasons not to, but doesn't mean it's not possible. Anyway, thanks for watching. I want to make sure I give good content on here. And I was kind of tired of like making the video and then cutting and pasting it and stuff like that, and then posting it. Sometimes I feel like just doing a live video so you can see me as well, and how I talk and my stutter and stammering and things like that. And you know what you're going to get when you do give me a call, because I hope you all know I'm your guy when you want to figure out something, because even to this day, I'm celebrating a win today. I managed to get a warranty company to actually replace an AC unit that on somebody that just closed on a property, in 100%. That's a good $10,000 to $15,000 bump or service for my client, and I'm on a high on that because I busted my butt to make sure that they got that. I was all over them. And if you want the hardest working realtor out there to be on your side, give me a call. Talk to you later, guys. Bye. How do you stop from here?